And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, the first day of February. I'm John Hoagland. Thanks for trusting me with your time. Who's ready to go fishing? We got some fishing to do today, as always. We're focusing on context, trying to find accurate context in the marketplace, thinking about risk management first, and trying to stay patient, as always. If you're already in the markets, hopefully things are going your way. If you're out on the East Coast, hopefully you've been able to dig out of the weekend snowstorm. Looks like we've got a little snow coming our way here in the Chicagoland area. I'm really hoping that it misses us a little bit to the south. That's what it looks like they're saying now. But if not, we may have as much as a foot over the next 24 hours. And not looking forward to that. Economic numbers this morning, 8:45, the PMI manufacturing index due out. More importantly, 9 o'clock Central Time, the ISM manufacturing index due out, as well as construction spending. Things that traders are thinking about today. It seems as though the Fed has tamed its tone or trimmed its tone. There were two talking Feds talking back on the aggressive tone on raising rates this year. May have had something to do with the buoyancy in the equities yesterday, but it looks as though that buoyancy still remains. I'm wondering if we're going to head back to that grind to the upside. We have late spikes all over the place today. It's going to be another interesting trading day. U.S. stocks set to open mixed to higher this morning. Exxon and UPS earnings out already. Apparently, Alphabet is due out after the close today, as well as PayPal and Starbucks. OPEC has now forecasted a million barrel per day surplus in crude this year. Now, they're not meeting until later on this week. I don't know how they come up with these numbers, but it might be good for us buying gasoline at the pump at some point. It was still pretty expensive last night. Make sure that you hit that lucky like button. Share, comment, question, feedback are always welcome. And you can subscribe to our YouTube channel so you can get notifications when we do go live. Just subscribe and hit the little bell and you'll get notifications. Again, we've got Coach's Playbook today at 11:30. We've got Foundation today also. That's not going to be on Facebook. However, here is the link to join up. We're going to be talking about the basics of market profile. If you've ever been interested, heard about it, thought about it, it's a good way for you to get your feet wet as far as the market profile is concerned. We're going to talk about some theory, how it's created, vocabulary, and even into some day types and some nuances. So it should be a really good one. It might be a little bit longer today. Just to warn you, it's a lot of information. And then, of course, tomorrow we've got foundations again. We're going to be talking about a business plan, and then the group coaching after that. So looking forward to a lot of time spent with our traders here, as I always enjoy doing. Taking a look this morning at the VIX, the Dixie, and the 10-year yield of VIX down about 1.6% down again this morning, as our equities are looking to try and continue this move to the upside. 24.41 last. Dollar index off a little bit, 96.41. And the yields continued to kind of fall off recent highs, 1.76%, a little bit lower than the close from yesterday. Got to say good morning to everyone. I saw we have Zerain first in the room. Zerain, you win the prize. Theo, good morning. Good morning, Joseph. Love the trophies there. Janus, Let's get some trophy fish today. How does that sound? Dave Francis, good morning. First day in the program. Good to be here. It's good to have you here, Dave. The market forecast. We focus on the popular products here at Top Step, crude oil, E-mini S&Ps, Nasdaq, gold, the euro, the 10-year, and the natural gas is a newer product for the market forecast and the market recap, but we do try and listen to people's requests and make changes as they desire. So we recently added that nat gas. Take your time. There's no rush. This is a marathon, not a sprint. So we got to make sure and just try and add to our accounts every day. Dave, I'm looking for good success for you here. Brian, good morning. Ray, it's always a pleasure to see you, Ray. Terry, Ryan, Frederico, Drew, good morning. Welcome back. Brody, Chris, good morning. Lacey's out playing in the yard right now, but I'm sure she says hello. Robert Kennedy, George, good morning. Michael, Manuel Caesar, Kevin Guy, Equanimous Trading is rocking in the free world. Jeff Martin, Jeffrey, Eric Galen, good morning. George, good morning. Charles, Vince, my man, good morning. Isaac, Ray, again, good morning. Yes. Robert Kennedy, one of the irony. AB, Johnny Baracco, good to see you. David Keene, Andre, Sarah Hall, always love to see the dawn after your fine good morning. Andrew, there's that link for foundations today. Hunting for the three-legged wildebeest. Excellent. Yes, just lay in the weeds. When they come close to you, go grab them. Robert S. Jerry is awake. Hopefully John is too. Nico, Ricardo, Ryan, three-legged wildebeest end up running for days. Yeah, right. Good morning, Michael. Denny. When? Michael H. I'm far from a legend, but I appreciate that. EGB. Kevin, good morning. Devante. Mirik and Jay, good morning to everybody. As always, we're going to look at these charts. We're going to see what we're seeing. And then we, Dan has been busy lately. He says hello to everybody. He sends his love. He's been unable to manage the market recap. I've been covering that for him. So it gives us an idea. It gives us a chance to really look at what we looked at in the morning, review that in the afternoon. I know Dan is missing you all, and I know you are all missing Dan. So without further ado, why don't we jump into the charts here? Let me make sure I'm set to the right spot, starting with the E-mini S&Ps. And here we go. And as always, we're going to be looking for accurate context, risk management, and always exercise. That's not the right thing we got going on there. What is all that about?
Anytime you're talking about fundamental.
Mistake number one for the day. Let's take a look now. All right. All right, so now we finally got things headed the right way here. All right, E-mini S&Ps. Pretty decent volume on the New York Stock Exchange yesterday. You're not going to necessarily see it in the futures, but looking at New York, it was up 5 billion, a little bit higher than the previous day. So at least in the underlying commodity here, we're seeing some pretty decent volume. As we know in the equities, the volume generally does not increase on up days and in up periods of time. The market just kind of continues to grind shorts the whole way up. We did lose open interest yesterday, about 50,000. I find that relatively interesting. We were kind of looking or hoping for an accumulation on this move to the upside, indicating money was coming in this direction, but it seems as though it came out. Maybe we finally squeezed out the last of the shorts that were holding hope that we were going to continue this move to the downside. But today will be, I think, a little bit more important as far as open interest is concerned. I'm going to want to see if we continue this move to the upside and increase in open interest tomorrow morning. So tomorrow, Well, today, we're going to be monitoring for continuation. We've broken out of the balance area. When we break out, the rule is you go with the breakout, which is to the upside. We've already got an overlapping to higher price bar overlap here in the extended trading hours. What's going to happen in the regular trading hours? Well, as we remember from yesterday, we had a late spike to the upside. The market opened in the late spike, took a look to the downside. That down auction failed, and we moved the market higher for basically the rest of the session. Now we've got a similar situation here. We've got another late spike. We've got settlement right at the high. We don't really have much as far as overnight inventory is concerned. We're about 35 minutes from the open. We could technically open with a gap, which gives us late spike rules and gap rules if we open in the late spike or come into the late spike, as long as we don't accept down below the base of the late spike, which I've got marked here in this red line, which is 44.89. As long as we don't reaccept below that level, the market is accepting higher pricing, and we're going to look for opportunities to buy weakness if we get them. Yesterday, we didn't really get too many weaknesses with which to buy. That failed downside auction, once we got above the opening range, it was pretty much all bets are off to the downside. We are going higher. Today is a new day. Anything can and will happen. So, yeah, the idea of the late spike is late in the session, price gets to a new level. It puts in a new high or a new low and does not have time to find acceptance in the regular trading hours session. Opening within that late spike indicates a possible acceptance of higher pricing. So we try and work our opportunities in that direction until proven wrong. How does it get proven wrong? Acceptance below the late spike. Now, everything that we look at, details, levels, everything is a zone, and acceptance is, of course, subjective. It's what makes this so much fun. We've got to just keep throwing our line into the water, and once in a while, we're going to catch a fish. Once in a while, we may catch a big fish, and I like catching those big fish. Where are they today? Well, the late spike, if we open with a gap and can't close the gap, we're going to trade in the direction of the gap, which has us looking for longs. Opening range trade, could it be an opening range trade type day today? I don't know. The opening range is streaky. A lot of traders look for it. If it happens a lot, they all jump in and wreck it for the rest of us. And then they'll abandon it eventually. I'm not sure if it's been abandoned just yet, but I'll keep an eye out. And if the opening range is small enough, it might be worth taking the opportunity no matter what. Even if there's a small loss there, the opportunity to catch that opening range trade can be monumental by the end of the session. So I'm going to be monitoring for new accumulation for continuation in this upside move. If we continue to push higher, one of the ways that I'll look for it, and this is something we talked about in foundations, is through delta. If you have a cumulative delta, mark where the delta starts the session. If we continue to push higher over time and delta decreases in value, that can be an indication of an accumulation in longer time frame. And that's something I'll be looking for today if I manage to get into a good trade, and I'll be watching to see if we're going to possibly continue that move to the upside. Spencer noting that this high volume node, basically, we put in the point of control yesterday, the volume point of control, in a very short period of time. This is a lot of volume at the very high right at the end of the day. Thank you for pointing that out, Spencer. Is that appearing to be an unfinished upside auction as well? Time will tell. Let's go back to the crude oil now, because we like to sometimes catch that first open. Volume and momentum slow. We've been talking about that. We've been talking about the divergence in the stochastic and in the RSI in the foundations meeting yesterday. It still looks like this market, which is attempting to continue its move to the upside, is struggling. We added 4,500 contracts in open interest yesterday, but on pretty low volume. So the fact that we've kind of fallen into a range here and are struggling to continue this move to the upside is cutting off volume. I don't know about that. I don't know if that's such a good sign. It's largely range bound here. We got API this afternoon and EIA tomorrow, so there's information due out for us. We also have a potential, get this, late spike. We put in a late spike at the end of the day yesterday. We have the settlement price all the way up there at 45.04 quarter. We lost, I'm sorry, settlement 88.15. I'm looking at the wrong thing here. We added 4,500 in open interest on this move to the upside. That's encouraging because most of the move is to the upside. And with the late spike at the end of the day, we got some short time frame traders too short here, and they put up that late spike for us. But we're going to be opening below that late spike. This is marking rejection of higher pricing. OPEC did say yesterday they're expecting a 1 million barrel per day surplus in crude this year. I don't know where they get that information. They're meeting later on this week, so I don't know where they coming up with that number. But I'm okay with that. If it lowers prices at the pump, I'm all down for that. The market is going to be opening and did open in the value area from yesterday, which does suggest to me to stay patient. Overnight low might be an important level for us. It did not necessarily open in an area that bodes for repair. If we opened in here in this low volume node, I would think that this might be more prone to repair. Doesn't mean that it's not going to happen. Now we've just taken out the low of the overnight session 1 minute chart, maybe a little bit late for this, but it does appear that our opening range is the high of the session. We get a pullback towards that level. It might be an interesting opportunity for us because not only is this a good start here to the opening range trade, it's only 9 ticks. The opening range, 9 ticks. We've been seeing 20 tick opening ranges. This makes it even cheaper. So if we were in time, maybe we could have caught this. And I apologize for that. The market really trying to push to the downside. When the opening range remains the opening, means the high or the low of the regular trading hour session, that tells us there's maybe sellers in this market, or buyers if the opening range is at the low. And right now it appears that sellers are in control right off the open. What are we looking at? Value low. If we reject value, we've got plenty of things to look at down below. As far as visuals, we've got a gap. We've got the low of the balance area that we are in. This might be a nice little opportunity for us to take profit in this opening range trade if we are in it. And then look for opportunities if we start to get into the gap, see if we can finish closing the gap. So this is a pretty decent opportunity off that opening range trade. I gabbed so much about the S&Ps, we kind of missed it. And I apologize for that, but there is a wonderful example of how powerful a opening range trade can be. Geez, the fact that it was only 9 ticks wide, 8 ticks wide. I mean, for real, you're only risking 8, 12 ticks on this trade, and it's already worth about 60 ticks as it sits. That, to me, ladies and gentlemen, screams good risk reward. All right, here's the Nasdaq. Very similar situation to the S&Ps. It's been a little bit more beaten down than the S&Ps. We lost only 765 in open interest on this push to the upside while cutting off volume. That's a little bit concerning for continuation. However, we're going to be monitoring for upside continuation. We already have overlapping to higher price bar overlap in the extended trading hour session, very similar to the S&Ps. We've looked to the downside. We also now have a late spike again in the Nasdaq. We were rejecting it, that late spike to the upside in crude oil. Are we accepting it in our equities? It would appear so. Settlement 14,905 even. Here's our late spike. The base of the late spike, 14,825. I've put this red line on here just to make it a little bit more obvious for us. Lines up very nicely with our overnight low as well as the value high from yesterday, which is basically that level, that zone, if you will, of the base of the late spike. The Nasdaq looking more like there's very little overnight inventory, and looks like a higher probability of opening with a gap from yesterday's session to the regular trading hour from this session. If we can't close the gap, that's another nuance of price being accepted at a higher level. Remember the spike rules. We open in or above the late spike, that's acceptance of higher price. We open with a gap and can't close it to the upside. We also have another nuance that says this market is presenting as a strong market. So we've got some more decent opportunities. Yesterday we also had the late spike. Okay, we opened above it, tested back, closed the gap, found buyers, and off to the upside we went. The late spike is a powerful opportunity, and I really love those trading days. I love to fish when we are relatively sure there's a lot of fish. Gold. Right, so here's the gold. Volume and open interest really starting to dry up on this low here. We lost like 4,200, I think it says here, in gold yesterday on lower volume. This push to the downside really not bringing in a whole lot of participation. The markets are always seeking two-sided trade, volume. And this lower area seems to be cutting off activity. So it doesn't seem as though the market is pleased with the ability to facilitate trade down in this level. It's going to seek other levels. It looks to be pushing to the upside now. Take a look here on the 30-minute chart. If you remember yesterday, I was like, I don't really see a whole lot of great opportunity here in this market. So it was a pretty small range. And really kind of whippy. You can see the pin bars or the shadows, that when we pushed higher, it got pushed back. No real momentum to the downside. Now we've put in 1, 2, 3, 4 points of contact on this trend line. So if I'm thinking this market is going to head higher, we've opened with a gap. We are having trouble closing the gap. If we were to come back down and test down to this trend line, that would be an interesting opportunity for us. But now it's just got us kind of up here in space. There's a lot of space up here. And again, it's going to be difficult to find good trade locations. So I'm going to be focused on the initial balance, that first hour of trade. That first hour of trade is going to give us our first really daytime frame reference with which to look for opportunities. We've got plenty of visuals above. We've got a previous gap that remains unchecked. We've got 1 point of control down below with which to look at. I'm thinking that if we're heading towards visuals, the upside is the way. It's going to be a challenging trading day, I think. Again, in gold. Yesterday, I didn't look at it, didn't really do much. My expectation of it being a tough trading day in gold yesterday, I think, proved to be correct. We had the one push to the upside and then just chop. It would have been very easy to get chewed up and spit out. All right. Take a look now into the euro. Kind of similar to gold in a way. Yesterday on the push up, however, we had a nice boost in open interest of 2,700. We had an increase in volume yesterday. So off the bottom here, right away, we get a little bit of an accumulation and a little bit higher volume. We have price bar overlap to the upside today in extended trading hours and regular trading hours. Looks like the market is continuing to try and push to the upside. We do also have, guess what? A bit of a late spike. Okay, the base of that late spike is right about here. I'm going to say 124.50. 112.47, I think, is what I wrote down here. 112.47 is the base of the late spike, but it's kind of moot now because the market has driven above range. This blue area here is a previous gap that we filled pretty much to the tick yesterday. We're holding above that gap. We're holding above a late spike. We've got a gap that we've been unable to close relatively early. This market is presenting as though it is looking to the upside. It looks like the market is attempting to continue to move to the upside. So we're going to try and find opportunities to buy weakness. Regular trading hours for the euro, 7:20 till 2 o'clock p.m. Central Time, all Central Time. Right. So as the market turns here, the euro is looking like it is attempting to continue to the upside. The only thing that's going to break that for me is if we find acceptance below the base of the late spike, which that base of the late spike is again 112.47. On to the 10-year. Looking a little bit like a double bottom here, a W bottom. Rates have been slipping off recent highs. It's got, I think, a little bit of this drive to the upside. We added 44,000 in open interest yesterday on a largely inside day. We did add a little bit of volume, so that's encouraging. We're going to be monitoring for a continuation to the upside, especially if this double bottom or this W bottom continues to hold. So when we're looking at a 44,000 contract accumulation in the 10-year is so thick, it seems like a big number, but it's probably not that big. Here's the 30-minute chart. We have the market opening outside of range and value. We have the market opening with a gap, looking to come down and close the gap. This may actually end up being supportive for us. If it is not supportive and we accept back inside value, range, and or value from yesterday, that means that we may see this market pull back to value low. What makes acceptance official? Always a challenge. When I first started learning profile, it seemed as though we were always looking for 2 30-minute bars to close in the area that we're seeking acceptance in. There's no finite number, unfortunately, Ron. The market sometimes will find acceptance almost immediately and rush all the way through the range that we're looking at. Sometimes the market's going to tease into it and then finally run into and come through the level or the area that we're looking at. Unfortunately, it is a very subjective term, and even if you're not participating, Ron, start watching situations where we are looking to accept or reject specific areas, like a value area special situation play. This market opened outside of range and value, but if at some point the market reaccepts inside the value area from yesterday, there's a higher probability that acceptance means that price is going to at some point during that session rotate to the bottom of the value area. So that's kind of one of the things we're monitoring for here in the 10-year is the possible reacceptance of value from yesterday to bring us an opportunity down to the value low. It's never easy and usually very tricky. That's why I think a lot of folks, including Jim Dalton, doesn't really focus that much on the value area special situation play. But we've seen, I mean, as recently as last week, an excellent opportunity, an example of it. And let's get through the charts here, and we'll go back and look. And it's in the S&Ps. We talked about it in the forecast. It ended up playing out by the end of the day. All right, so let's go look at the natural gas. Here's the daily. So yesterday, we were looking for continuation to the upside. We didn't really get it. We did add 1,900 in open interest, but on lower volume up against a previous swing high that is the weekly kickoff high. So the market now kind of coming off of that volume, not that impressive on a potential continuation. Remember, when we're looking at a market that is auctioning in one direction, volume is one of the key parts of a continuation. If volume starts to fall off and or open interest, that's an indication that the market may be slowing or weakening in that direction, and we have to think about that in our opportunities. So yesterday's volume was very low. We did have an increase in open interest, but with that low volume, that's a little bit unnerving for longs. Of course, we're looking for more buyers. We're looking for a robust auction with lots of people bidding and jumping over each other for natural gas, if you will, and the price moving swiftly and easily higher. That's a robust upside auction. Yesterday did not present as one. What does that mean for us today? Well, we've got some overnight shorts here. We did open with a gap apparently, and we have now closed the gap. If we did open outside of the range, now we're faced with a potential value area special situation play, which again means we open out of range and out of value. Acceptance of value from the previous day could mean by the end of the session, a move to test the other extreme of value, which would have us up here near yesterday's high. Okay, so the fish are out there. You just gotta throw your line out there and hope you don't get it snagged on anything on the bottom and lose your lure, or get it stuck in a tree or something like that. I was pretty famous for that fishing, getting my lure stuck in a tree. But there's fish out there. There's big fish out there. You can feel them. You can almost taste them. We got to go get them today. Bubski. You can find open interest on most platforms. Here's the quote board. Okay, that on here. So we're going to go to select columns, open interest. I'm going to drag this over here and put it by settlement. Now we've got open interest. Now this is just the front month. If you're looking for more information or greater information, I find it here. What you're going to see is this, the daily bulletin. So I'm going to go in and I'm going to say, all right, let's check out crude oil. Now I'm going to make this big so everybody can see it. This is the preliminary number. It's preliminary because it takes time for the exchange to calculate true open interest. when you look at crude oil, there's open interest that goes out for many months, even years. If I'm collecting open interest information, I want to collect all of that information, because sometimes there's an accumulation in a future month that if we're only focused on the front month, we may miss that. So we lost 19,000 in open interest in March. We've got about a week before we start thinking about rollover, but overall we added 40 through 45, 60. Now that's preliminary. Okay, at about 9 o'clock approximately, if you refresh the page, we're still in preliminary. Volume, settlements, all of that's going to be correct. The only thing that may change a little bit is open interest. Important safety tip for you. Right? All right, so we've got about 9 minutes before the equity open. No problem. Butsky, that's what we're here for. Don't forget about foundations to today. And here's the link to sign up for group coaching tomorrow. Now, group coaching has been a little bit iffy as far as the time is concerned when it starts, because we have the foundations kind of stepping on the front of the group coaching. So we're trying to get it started at 1:30. Group coaching, that is. Foundation starts at 12:30. Sometimes a little bit late. Sometimes right on time. Sometimes we're a little bit early, but we are going to be there. That link I just put in is for registration for group coaching, and that is again tomorrow at approximately 1:30. Group coaching is always on Monday and Wednesdays at 1, because the foundation we're starting it at 1:30. So I look forward to seeing you there. If you have any other questions and thoughts. Tell us the story about the fretboard on your wall. So I have a deck on the back of the house, and we've done a fair amount of entertaining back there. And I had an old guitar, several of them actually that I just kind of as a conversation starter hung in the tree that was growing right next to the deck. So everybody's hanging around, and it was kind of stuck in there, and pretty soon people are going, "Why is there a tree in your guitar?" And I just kept telling them, that's where it lives. The guitars live in the trees around here. So it kind of became a talking point, and it got weathered and old, and the fretboard fell off of it. So I just thought, well, it's kind of interesting. Somebody someday is going to ask me about it. And today you did, Equanimous. Oh, echo. Dagnabbit, I keep forgetting to take off the echo. Sorry about that. So, all right, let's take our deep breath. We got about 5 minutes here. Stay humble, grateful, and creative in your trading today. Take your time to learn. Take your time to journal. Take your time to improve. And take your time to fish. Go get some fish today. Get out there and profit. I'll see you in the proverbial trading pit in just a couple of minutes. And trade well today. We'll see you at 11:30 for the Coach's Playbook. I'll see you at 12:30 for the Top Steps Trading Foundation. And then I'll see you again at 3 o'clock for the market recap. So have a great trading day. Looking forward to hearing some good fishing stories later on. Trade well.